Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. And holy moly, did we get a big sell-off all in one day. It was so beautiful and I can't wait to talk to you guys about it and give you guys my trade ideas and trade setups and my analysis on this chart that we are looking at here. But before I do, I just want to address quickly why there was no video yesterday. Okay, I did make a video and I did release a video, but then I ended up deleting the video. Okay, I believe honesty is the best policy. Okay, and I made my usual video with the analysis, but inside my analysis, after rechecking my work, my analysis was not on point. It was not accurate. Okay. And I'm gonna humble myself right now and just admit to you guys that the analysis that I gave in yesterday's video was bullshit. It wasn't right. So instead of spreading bullshit, I decided to delete the video. Okay, and I didn't make another video because I was just pretty upset with myself. Okay, so I just took a break, cooled myself down, reset. I still got my Discord members that I gotta be there for, and I love you guys. Big shout out to my Discord members for being so understanding. Okay, so that's the truth. That's what happened. All right, so this chart right here, this big bodied red candle, all right, is what we are going to talk about today. All right, so let's prepare. Okay, we look on the 15-minute chart here. Okay, we had this very nice at 10:45. We had this very nice false breakout setup here at the 400 level. Okay, we had initial breakout of the 400 level right here at 9:30, and it went as high as 41.47. I had a zone I was watching, 41.5 to 42 zone, as you guys know. But at 10:45, this candle right here closed at 399.95. It gave us a weak breakdown of the 400 level, but even if it's a weak breakdown, I still gotta report it, and I'm still gonna trade it unbiasedly. Yes, Uncle bought puts there when I saw the breakdown of 400. My stop loss would have been at 401 or on a close above 400 on the 15-minute chart. Okay, as you guys can see, my stop did not get hit. Okay, and it was my best trade setup, call out, whatever you want to call it, on my Discord. I wrote here, time to zoom out. Sometimes it's good to look at the intraday analysis, but it's good to zoom out. On the daily chart, I have the 38.2 fib level at 41.68. So far, SPY got very close to the level and showcased selling pressure. Guys, remember how Uncle talks about the level role reversal when we see a previous support level turn into a resistant level. That's usually bearish. Okay, and I wrote right here, with this context in mind, I need to see a strong break above 41.5 to 42 zone to enter calls, which never happened. I missed a sentence here, but this is the one I wrote. That's what I'm proud of. We just need 400 to fail to enter puts. Then I had price targets below, and then I alerted the group right here that we got the close below 400 on the 15-minute chart. Okay, very beautiful trade, and look at that, it just dropped. Okay, now here's where it got really exciting. It got even more exciting because I thought this level to level move was nice. Around 12 we chopped a little bit, but we broke down 398. Okay, most important thing to me is the price action. The news serve as a catalyst, but look at this price action. This candle right here at 12:30. I was watching the okay, my fault, that's the 398.5 level. This one right here at 12:45. It broke down and closed right below 398, and boom, look at that. Never recaptured 398 on the 15. I usually set my stop loss $1 from entry. It never even hit my stop loss, and it dropped. Look at that beautiful drop. Trend days are the best days. I can't sing, but price action like this make Uncle sing. Here we go with the daily chart analysis. Okay, now look at where the SPY closed at. No coincidence. As you guys know, I have my fib level from December low, okay, to February high. The 61.8 fib level was at 391.4. SPY closed just above that level, just above it. Okay? Can we break it down tomorrow is the big question. I tell you one thing. As long as below 393, I am Uncle Chartist is bearish. All right? 393 has served as a critical support level in the past multiple times, right? It's also around where, that's a 20. It's also around where the 200 daily moving average is, okay? According to TradingView, 200 daily moving average at 393.2. All right? Now, another thing I'd like to show you guys. That 393 level is critical for two reasons. But there's also another reason. All right? We got a head and shoulder pattern. Boom. Discord members, you guys know about this. Uncle mentioned this last night. I'm messing up here, guys. Sorry. Boom. That's the head. That's the right shoulder. All right? Left shoulder. Head. Right shoulder. And the right shoulder was an evening star pattern. Amazing. Okay? Here's the neckline. All right? There's the neckline. Boom. 3 touches. January 10th low. January 19th low. And March 2nd low. We got the breakdown. The breakdown also happened to be at 393. All right? So that level is critical for multiple reasons. 3 reasons based on the price action, based on the charts. 3 reasons. Okay? Combine that with some bearish fundamentals. All right? But does this guarantee that it's going to drop more? It definitely does not guarantee that this does not drop more. Why do we look at the chart? Why does Uncle Chartist look at these charts? I look at these charts to study to notice these type of patterns, but also I notice these type of patterns not to try to predict, but I want to react. Okay? A decision has been made. We got the breakdown. We have to think in terms of what would our fellow retail traders think is going to happen. Okay? Looking at this chart, what do you think your fellow retail traders think is going to happen? We got a breakdown, head and shoulder pattern. Right shoulder was an evening star. Bearish news talking about a crash is coming. Our fellow retail traders are most likely thinking we're going to drop more. And that could happen as long as SPY stays below 393. As long as SPY stays below 393, Uncle Chartist is bear bias. But remember, even though I'm bear bias based on a condition, assuming we stay below 393, I'm also willing to change my sentiment because I'm a sheep style trader. That means I will switch to be bullish if 393 is recaptured. Now think about it. If most of our fellow retail traders think we're going down, how would the market makers screw us over? Because that's what they want to do. Market makers want to screw us over. They always think, how can we F over the retail traders and take their money? How? Well, if most retail traders are bearish right now, they may want to try to push it up to destroy us. So we have to let the price action guide us. Uncle will stay bear bias as long as below 393, and I will favor more downside. 391.4 must fail. That's the fib level. 390, 388.5 to 387. Okay, 387 is previous pivot low over here. All right, those are the next target. Below 387, I got 385, 382, and 380. Okay, that's if SPY stays below 393. I am bear bias. But if SPY recaptures 393 tomorrow, okay, that's a false breakdown setup. Be very careful if we get a false breakdown setup and you're bearish. Above 393 would put 395 back in play. Let me get rid of all these. Bring my fib levels back. Okay, above 395 would put the 50% fib level of 396.54 back in play. My green trend line here for tomorrow is around 398.8ish. We can round that to 399. That's around. Also, you can watch the 50 daily moving average if you like that better. Okay, the 50 daily moving average is around 398.8 as well. All right, the 400 resistance level, of course, and that critical 38.2 fib level around 41.5 to 42 zone. Okay, we got a strong rejection from that today. Strong rejection. Look at that. We broke that fib level down back on Tuesday, and we saw the roll reversal of that fib level today, and it was amazing. Okay, so you guys got my levels. The bull case scenario starts above 393, and if it can clear more resistance, that would be even better. Okay, hopefully you guys got my levels. But as long as below 393, stay bearish, guys. The next critical level is the 61.8 fib level that I got at 391.4. If that fails, that'll be very bearish, and we could favor more downside. And also remember that head and shoulder pattern. We broke the neckline today, all right? Triple Q, we broke back below my Fibonacci channel line that was at 294.2, and we closed below the 38.2 fib level, which is at 293, okay? I have fib levels from January, this is December 2022 low, up to February high, okay? The 38.2 fib levels at 293. I would stay bearish as long as below 294 highest, okay? Based on the Fibonacci channel line. Below 293, even better for bears, okay? The next critical support is at 290.5. And if that failed, 280.5, 286.7, that's 285 and 282.5 to 283 zone in play, okay? I will be bullish on Triple Q above 294, okay? It needs to recapture 294 to be bullish, to trigger more upside. 296. We got 298.5, 300 to 301 zone. Above 301 would break out this white trend line that I have here. Let me change the color to light blue. All right, that's when I will be bullish. Just recapture 294. As long as below 294, stay bear bias with those other support levels that I got in play. Okay, IWM, look at that, beautiful. Showed a lot of follow through. Okay, and the big critical support level, resistant level actually, is now at 182. All right, so yes, from all-time high down to June 2022 low. All right, I got the 23.6 fib level at 181.84. I like to round it to 182 because it's an even number. But as long as below 181.8 to 182 zone, stay bearish in IWM. That's the level that needs to recapture to give us a false breakdown setup. If it wants to give us a bounce, a dead cat bounce, or a full-on reversal, we will see. Okay? But stay bearish below 181.8 with the next support that I'm watching is at 180, and then based on this purple trend line that I got here at 177.7. All right? Now, if 182 can recapture, I would favor a test of 185 or 187.7 to 188 zone in play, okay? Tesla, holy moly. Since breaking down that fib level at 190, it's continued to show so much more follow through. We broke down another critical level I was watching at 184-ish, tested 184-ish as resistance today, a little above that, but rejection, intraday false breakout, similar with SPY, and now we closed below some other critical support levels. All right, so from all-time high down to the January 2023 low, I have the 23.6 fib level at 175.6. We lost that level today. We got a bunch of big breakdowns. Okay, NFP tomorrow too, guys. NFP tomorrow, holy moly. Big breakdown before a big catalyst day, huh? These market makers are good, I tell you. Anyways, so yeah, to be bullish is gonna have to recapture 176. All right, 175.6 to 176 zone. Recapture that level, clear it to put 180, 184, 186, and then 190 back in play. Okay, gotta give us that false breakdown setup. All right, as long as below 176, I will stay bear bias. All right, the next first resistance at 173.5, that needs to recapture, but as long as below 173.5, I got next support at 170, 167, and then 162-ish with 159.7 below. Okay, guys. Apple broke down. We had a inside day candle setup yesterday, and it did break down the mother candle's low. All right, so as long as below 151, stay bearish on Apple. All right, yeah, it needs to stay bearish on Apple as long as 151 is resistant, and 149 is the next support with 147.5, 146.6, and a gap fill at 146 is in play. Okay, now if we can recapture 151, we could get a false breakdown setup to put 152, 153.5 to 154 zone to 155 and 156.5 ish in play. Okay, so basically needs to recapture 151 at least to be bullish, otherwise stay bearish. All right, VIX, big pop up on the VIX, recapture 21.2. all right, oops, that is the my 23.6 fib level. Okay, so as long as it's above 21.2, stay bullish on the VIX. I need to see it clear 23.87 to trigger more upside. Now, if it breaks back below 21.2, VIX is bearish again, which could affect the SPY. All right, that's SOX. That's SOX. That's the wrong one. Let me go to DXY. Here's the DXY. Didn't get much movement from the DXY for some reason. And it closed below my Fibonacci channel line at 105.4. It closed below that. So it needs to get back above 104.5 to be bullish, to put 106.1 and 106.8 back in play. Okay, if it stays below 105.4, my Fibonacci channel line, I have support at 104.9 and the critical one at 104.1. Below 104.1, I would switch to bearish on the DXY. Okay, now let's, oh, that's the dark pool. Go to the SPY. That's SPX. All right, here's the SPY. Filter for 500K premiums or above. 94% for puts. Big money. You got access to this, guys. You can see it all in real time. I think it's worth it to get access to these option flows. And I'm using Cheddar Flow, but it's very bearish, guys. Look at here, March 14th. Expiration date, 381 strike price, over 5,000 size, over 600K in premium, sweep orders, very aggressive. Here's another aggressive one, April 6th, 356 strike price, over 10,000 size, over 700K in premium, sweep orders. You guys see this? Look at this one, over 12,000 size, 395 strike price, so not that far out, but 10.6 million in premium. Big money is bearish. You can see a lot more too. Big money is 80,000 puts compared to calls, guys. As far as the 500K premiums or above goes, 54% in the calls. Interesting. Nothing that really sticks out to me here. None of them are over 5,000 in size, but over 54% in the calls. IWM 75% in the calls. Nothing that really sticks out. This one have over 8,000 size, but it's a split order. So, but yeah, that's 75% in the puts. Apple, 85% in the calls. A lot of it is towards the end of March. Well, a couple towards the end of March. We got September, July, and December. So, okay. Yeah, Tesla, 94% in the puts for Tesla. Holy moly. VIX. Wow, 85%. Haven't been seeing any activity for the VIX in the option flow, but today, they definitely came through. Okay, guys, so that's what I have for you guys today. Thank you guys so much for watching. If you guys want more content from Uncle Charles, please consider joining my Discord. Peace.